Types of markets explained. The financial world is made up of many different markets, each serving a specific purpose. Together, they create the system that allows money, goods, and services to move across the world. Understanding these markets helps investors, businesses, and individuals make informed financial decisions. Let's explore the major types of markets that shape the global economy. Stock market. The stock market is one of the most well-known financial markets. It's where companies sell shares of ownership to investors. When you buy a stock, you become a partial owner of that company. Stocks are traded on exchanges like the New York Stock Exchange and Nasdaq. Investors buy and sell stocks to profit from price changes or to earn dividends, a portion of the company's profits paid to shareholders. Stock prices move based on supply and demand, company performance, and overall economic conditions. Major stock indexes like the S&P 500 or Dow Jones Industrial Average track how groups of large companies are performing, giving an overall picture of the market's health. Bond market. The bond market is where governments, corporations, and other institutions borrow money from investors. When you buy a bond, you're lending money in exchange for interest payments and the promise of repayment at a set date in the future. Bonds are generally seen as safer than stocks because they provide predictable income. Common examples include U.S. Treasury bonds, municipal bonds, and corporate bonds. Investors use the bond market for stability and diversification, especially when stock markets are volatile. Forex market. The foreign exchange market, or Forex, is the largest financial market in the world. ETFs often track indexes like the S&P 500 or sectors such as technology or healthcare. It operates 24 hours a day, 5 days a week, and involves trading one currency for another to move across the world. For example, traders might exchange US dollars for euros or yen. Exchange rates constantly fluctuate based on global trade, interest rates, inflation, and political events. Because it's decentralized, there's no central exchange, trading happens electronically across a network of banks and brokers. The Forex market is essential for international business and investment, as it determines the value of currencies around the world. Commodities market. The commodities market deals with raw materials and physical goods such as gold, silver, oil, coffee, and wheat. There are two main types of commodities: hard commodities like metals and energy, and soft commodities like agricultural products. These goods are traded through futures contracts, agreements to buy or sell at a set price in the future. Commodities markets are vital for producers and consumers to manage price risks. For example, farmers can lock in a price for their crops, and airlines can hedge against rising fuel costs. Derivatives market. The derivatives market involves financial instruments that derive their value from underlying assets, such as stocks, bonds, commodities, or currencies. Common derivatives include options, futures, and swaps. Derivatives allow investors to hedge risk or speculate on future price movements. For example, an investor might use an option contract to protect against a drop in stock prices. While derivatives can be powerful tools, they can also be complex and carry significant risk if not used carefully. ETF market. An exchange-traded fund, or ETF, is a collection of assets such as stocks or bonds that can be bought and sold like a single stock. ETFs often track indexes like the S&P 500 or sectors such as technology or healthcare. The ETF market has grown rapidly because it offers diversification, low fees, and flexibility. Investors use ETFs to gain exposure to entire markets or industries without having to buy individual stocks. They are an easy way for beginners to start investing with less risk and effort. Energy market. The energy market focuses on the production, distribution, and trading of energy resources, primarily oil, natural gas, coal, and electricity. These markets are heavily influenced by global events, supply and demand, and government policies. Energy prices affect nearly every part of the economy. For instance, higher oil prices can increase transportation costs and consumer prices. Traders in the energy market watch OPEC decisions, geopolitical tensions, and environmental policies closely to predict price movements. Real estate market. The real estate market involves buying, selling, and renting land or properties. It includes residential, commercial, and industrial sectors. Real estate values are driven by location, interest rates, and economic growth. Investors participate in this market by owning property directly or through real estate investment trusts, known as REITs. The real estate market not only provides potential income through rent but also acts as a hedge against inflation since property values often rise over time. Money market. The money market handles short-term borrowing and lending, typically for periods under 1 year. It includes instruments like treasury bills, certificates of deposit, and commercial paper issued by corporations. This market is essential for maintaining liquidity in the financial system. Banks, governments, and large corporations use it to manage cash flow efficiently. For investors, money market funds offer a low-risk place to store cash, while earning modest returns. Cryptocurrency market. The cryptocurrency market is a newer and rapidly evolving space where digital assets like Bitcoin and Ethereum are traded. These currencies use blockchain technology, a decentralized digital ledger, to record transactions securely. Unlike traditional currencies, cryptocurrencies aren't issued by any government or central bank. Their prices are driven by supply and demand, investor sentiment, and regulatory developments. While volatile, crypto markets have created new opportunities for investment, innovation, and financial inclusion. Unlike traditional currencies, cryptocurrencies aren't issued by any government or central bank. Each market plays a unique role in the global financial system. The stock market fuels company growth, the bond market funds governments and corporations, the Forex market connects currencies, and the commodities and energy markets drive trade and production. Real estate builds wealth, money markets maintain liquidity, and crypto represents the frontier of digital finance. Understanding how these markets work helps you make smarter financial decisions and recognize how global events influence your money. The more you learn, the more confidently you can navigate the world of investing. If you found this explanation helpful, don't forget to like this video, subscribe to the channel, and explore more educational content on investing insights, where knowledge leads to smarter investing.